Hello and welcome everybody, I'm Stephen and I'm a popular investor on eToro. Thanks very much for listening to this video today, and don't forget to like this video and subscribe to my channel. I will really appreciate that, so please take some time out to do that for me. In today's video, I'm going to be talking about what happened in the markets last week, and I'm also going to be talking a little bit more about our strategy as well. So again, last week was a very difficult week overall for the market, and the Nasdaq was down about 3.8%, whereas the S&P 500 was down about 2.5%. And if we compare that to our portfolio was down about 3.4% for the week. So it did outperform the Nasdaq, but was slightly behind the S&P 500. The reason why the portfolio didn't perform that great last week was a lot to do with the crypto market. We saw some quite large reductions in the crypto market, especially over the last couple of days. So that had an effect. Also, some of the growth stocks, which I have less of compared with most portfolios, but they didn't perform particularly well. I think the only asset class that performed well last week was the consumer staples sector, which is affected a lot less by worries around inflation and also worries around the recession, which I don't expect to happen. So, I mean, even the energy market was down quite a lot last week, and that's been performing very well in 2022. But we even saw a reduction in some of the energy stocks last week. So, all being said, although the markets are looking quite dreary at the moment and there are a lot of blood in the streets, there are also a lot of opportunities emerging, and I continue to keep an eye on all those opportunities, and I may add some more stocks to our portfolio. And it's at times like this that I tend to have an available balance in my portfolio at all times. This allows me to try to seize upon the opportunities that may happen in the market, whether that be stocks or that be crypto or commodities. So I will keep an eye out for future opportunities that I can take advantage of. So please be patient with your portfolio. I know at the moment, majority of you are seeing red color around your different copies, including me, but also your own individual stocks. I think the most important thing is temperament. I think intelligence is often overestimated, and temperament is probably the most important thing when investing. So the best thing to do is not to panic, for you to continue to add to the market and continue to add to your positions. And I think in the future, you'll be very happy that you did that at times where the market has been down, because it will allow you to bounce back a lot quicker when the market turns around again. So I think keep your temperament and keep a long-term perspective. As we move on to the global weekly market update, and I'll start off with the US. And as I mentioned, the US indices were generally down last week, especially the Nasdaq, which performed pretty poorly. And I think the worst performing sector of last week was the communication sector. And we saw a lot of the online streaming companies lose some ground last week, and that was on the back of the Netflix earnings report. And Netflix actually plunged by 35% last week after those earnings, and that was due to poor results and poor quarterly results from Netflix, but also more importantly, a reduction in global subscribers. I think that they're having a lot of problems at the moment because of losing those global subscribers. And one of the main reasons is obviously the pandemic is starting to kind of slow down, and people are right now are more likely to be going out and enjoying their life and have less of a reliance on Netflix for their entertainment. And I think the other area is that they need to crack down on is people sharing their passwords with family members, etc., in which I'm sure is causing a drop off in sales for Netflix. However, that being said, I do think it is an overreaction, and I have last week added some small percentage of Netflix to our portfolio because it had already gone down quite a lot during the year already, and with that 35% reduction again last week, I think it's looking very interesting at these price levels. There was also some interviews last week with James Bullard, who is the head of the Federal Reserve in St. Louis, in which he has said that there could be discussions in the next FOMC meeting that they could look at making interest rates but as high as 0.7% increase in the next meeting. He said that that is not the base case scenario, however, and he does expect 2022 and 2023 for there to be growth in the economy, but he thinks that they have to do something to start to curb inflation. Also, Jerome Powell said at an International Monetary Fund meeting that the Fed had to do more in order to curb some of that inflation, and he said that a 0.5% increase is not off the table for the next FOMC meeting. I think it's more likely that a 0.5% increase is going to be happening at the next meeting. I think they have to do something to curb that inflation, especially after what has happened in Russia and Ukraine, and some of that inflation is going to start to show up in the readings soon. So I think that they are just preparing us that there's going to be a rate increase. I think it is already priced in, unless they potentially go to 0.75% increase, which I think is unlikely at this stage. As we move on to Europe now, and last week the European indices were generally quite mixed, but on the whole down. And last week, Christine Lagarde, who is the president of the ECB, again reiterated that they're going to stop the asset purchases of bonds in Q3 2022. This was also backed up by the vice president of the ECB, which is called President Guindos, who has said that he expects that they could do more rate increases in the Eurozone by July. PMI climbed to 55.8 from 54.9 in March, which does show that there is an increase in activity in the Eurozone. And a lot of this is down to a increase in the services sector because we are going past those post-COVID lockdowns and those restrictions that were in place, which has really stimulated the services economy. However, we did see a stuttering in the UK economy with some data that was released around the PMI in the UK, and that actually saw the slowest rate for 3 months, and that showed that the PMI had gone down to 57 from about 62. So we are starting to see some slowing in growth in the UK, and a lot of that has to do with some of those inflationary pressures that we're feeling around the UK and some of the staff shortages that are in place. And in France, the latest polls around the presidential election, in which they will have the second vote, is that Emmanuel Macron is leading the way against Le Pen, who is a far-right candidate. It had been said that over the last few weeks that she was starting to gain ground, but it looks like Macron is quite likely to win if we look at the latest polls. So as we move on to China now, and again last week the Chinese market also suffered pretty severely. And one of the reasons for this is that the government in China said that they had no plans to remove the restrictions around COVID-19. Obviously, we've been seeing those lockdowns in Shanghai since about the 28th of March. However, they have said that while cases persist and there is still spread of COVID-19, they will not ease the restrictions, which had a negative effect overall on the stock market last week. We also saw the Chinese yuan also fall significantly against the US dollar, and it is continuing to see this weakness overall in the currency in China and also the strength of the US dollar. We're also seeing a lot of fear overall in the Chinese stock market, and a lot of that is to do with what's been happening over the last year and a half or so, in which the Chinese stocks have been mostly falling, and this is to do with COVID. This is to do with an increased inflation in terms of manufacturing costs and the costs of raw materials, some of the regulations that have been happening in China as well. And this has caused a big outflow of foreign investment in China. And in April alone, we've already seen $1.79 billion worth of foreign investors actually leave and reduce their positions in China. And that is on the back of March, in which they had about $7 billion outflow of foreign investors leaving the market. And this just shows that Chinese stock prices are at a very low level in terms of sentiment. The price has reduced pretty significantly. So it would only take a little bit of good news in order for Chinese stocks to rally back. We're also seeing more and more accommodative stances from the Chinese government, in which that they plan to bolster the economy as much as possible. And just unlike the US and Europe, who are starting to tighten the monetary policy, China is starting to ease their monetary policy. And I think that we could be in for a very good second half of 2022, despite the current sentiment. The People's Bank of China also decided to keep their one-year interest rates at about 3.5%, and also keep the 5-year interest rates at about 4.7%. So they are keeping those flat at the time. There was a lot of speculation that they may reduce those rates. However, they haven't done so yet. However, I do see that those could be on the table in the next couple of months, depending on how the Chinese economy goes and whether growth slows. However, the governor of the People's Bank of China, Gang, has actually said that China are planning to try to keep monetary policy as accommodative as possible in order to support the economy. We have seen that a few weeks ago that they reduced the reserve ratio requirement, and that is the amount of money that the bank is required to have in reserves. And this does help to bring more liquidity overall into the market. However, there was some really positive data from China in which said that the growth rate of China had increased by about 4.8% if we compare that to the year previously, and that was a lot above expectations, despite obviously these slowdowns compared because of the COVID-19 lockdowns that are currently in place. And I think that this bodes quite well overall for the economy. And I think even though we have seen some of these restrictions, I expect that once they are lifted, that activity, it might take a little while to bounce back, but I think that it will start to go towards normal, and there'll be a lot of demand in the market as people have been locked down for several months. However, the International Monetary Fund has cut the growth forecast for China for the second consecutive month, and it is estimating a 4.4% increase in growth rate for the year 2022, and that was compared to 4.8 that they previously said. So there is a reduction, and they are expecting a reduction in the growth rate, but that is to be expected, especially as the economy has slowed down, and in many states in China have been locked down for the last couple of months. So this is to be expected. As we move on to the top 3 performing stocks of last week, and last week there wasn't too much to shout about in terms of major increases. However, we did see a good increase from the 𝘃𝗶𝗃𝗀𝗃 in Germany, and our 𝘃𝗶𝗃𝗃 stock actually increased by 4.6% last week. The second best performing stock in our portfolio last week was GPI again, and that's been a common theme over the last few weeks or so, and that was up by about 3.6%. And we are seeing a continued increase in the cost of second-hand cars, and that has led to GPI having a good last few weeks. And the third best performing stock in our portfolio was Mondelez, which is a food company, which was up about 2.2% for last week. So as we move on to crypto now, and crypto again had a very poor week overall. And again, as I've been saying recently, there's more and more correlation between the crypto markets and also some of the growth stocks. And that a lot of that is to do with the threat of interest rates increasing, which leads to a risk off type of attitude from a lot of hedge funds and institutional investors. As I have said previously, I think that this is something that we have all been looking for in a way for the last kind of year to 18 months. And we wanted more and more institutional investors to be involved in crypto to add more and more buying pressure. However, we cannot complain too much when it starts to behave like an institutional asset, which it has done very recently. And I think that institutional investors look at the different investments in terms of buckets. And unfortunately, at the moment, crypto sits in that higher risk, risk off type of bucket. And when the markets are doing really well, then a lot of them pile in and they make purchases in crypto, especially Bitcoin. But when the markets pull back and they need to conserve cash and sell out of some of their losing positions, then they do sell off some of the crypto. So I think that is some of the weakness that we've been experiencing. However, we are seeing a lot of buying pressure from the Terra Foundation, who obviously run Luna as well. And the UST, which is the algorithmic stablecoin for Terra, is growing at epic proportions, and they are constantly buying Bitcoin in order to back the algorithmic stablecoin. So this is some really good pressure. We're also seeing consistent buying pressure from MicroStrategies, who continue to double down on the Bitcoin standard for the balance sheet. So we are seeing that. I think what it's going to require, is we need some significant buying pressure in order to increase the price again and go on another kind of bull run in Bitcoin. I think that will come in time, and we will see more institutional investors come on board. There is also some discussions at the moment as well around the Bitcoin spot ETFs, and Grayscale have a Bitcoin spot ETF that is due for approval over the next couple of months. I have always said that it is quite unlikely that a Bitcoin spot ETF will be approved in the near future. We have seen a lot of rejections over the last few months or so. However, I do think that Grayscale has the best shot out of all of the different Bitcoin ETFs because they have been running their ETP for quite a long time. And they do have some really compelling arguments why an ETF is much better than the current structure, because there is a lot of arbitrage. There's a lot of hedge funds that are trying to get kind of cheaper Bitcoin through Grayscale, as there is often a discount during tough times in the crypto market. And again, on the flip side of that, when the crypto market is doing really well, then you see these premiums that get put on top of it. So I think it's a lot fairer for US investors if they are invested in a spot ETF, which is at market value. However, we are seeing some very positive on-chain metrics for Bitcoin. And as I said, that the number of Bitcoins that haven't moved from wallets over the last year, so no activity over the last year, has got to a record high of 64%. And we haven't seen that for several years in terms of the Bitcoin not moving from wallets on a regular basis. So this is really good. This shows that it's been more and more acquired by long-term hodlers and some of those whales, which is generally a lot which happens during these markets, because when the price goes higher and higher, we see a lot of retail speculators come into the market. They buy high, you then see a dip, and then they sell to the stronger hands in terms of the whales or the long-term hodlers of Bitcoin. And then this starts to set a floor in the lows of Bitcoin. There is a lot of support of Bitcoin at about $36,000. This is at about that would be about a 6-month low. So I don't expect it actually to break below that level, although it could do. Although I think that the lowest it probably could go is around the $30,000 mark. I don't think it would go any lower than that because of the buying pressure from the Terra Foundation, MicroStrategies, and there's still a lot of interest in the markets. However, that 36,000 floor is one to watch, and hopefully Bitcoin can defend that. We also saw Coinbase last week, who are releasing an NFT marketplace. They have launched a kind of a soft launch of the NFT platform marketplace. And this hasn't been rolled out to all markets. But however, this is looking like it is being positively received. And I think that this could be good for the future growth of Coinbase, because now they're not only dependent on trading activity that actually happens in their platform and they get those trading fees. They also have a new market, which is NFTs. And I think NFTs does attract a very different type of person to what you would see in terms of just buying crypto assets and tokens. And this should lead to more growth in terms of Coinbase growing the user numbers and getting a real footprint into a new widespread consumer client profile. So I think that this could be very good overall for both the crypto space, but also for Coinbase as a whole, and as a stock that we have owned. And I did add a very small amount to our Coinbase position at a very good opportunist time. Also, just to let you know that I did record our eToro Popular Investors Forum group discussion a few days ago, and that should be released this Wednesday. And we have a really great group of panelists and guests which talk about all areas of the market, and we did not leave any stones unturned. And we really digged into what was happening in the market, although it is really tough right now. So keep an eye out for that, which I will release in a few days' time. Thanks very much for listening to my video today. I really appreciate all your patience and you all staying calm during these tough market times. Also, don't forget to join our Discord group. It's a really great opportunity to talk with a lot of like-minded investors and copiers, in which we talk every day about really interesting investment topics. And it is particularly good at the moment to talk with others during times where the markets are down, and to be talking with people that are in the same boat as you. I also regularly answer questions as well on there. Thanks very much and have a great week ahead.